Hey, what's going on, everybody? This is Paulio Jr. And I have kind of touched on this before, um, and I'm not exactly sure what I'm going to call the title of this video. But what we're looking at right now, I'm going to put the link in the description, are 39 different stocks that pay a monthly dividend. So typically, if you have a stock that offers a dividend, it's essentially just like having a savings account with a certain APY. So, which is usually, typically you're not going to get a normal savings account more than 3%. And 3% is like astronomical. So, and what I wanted to show you today were um, the the stocks that do pay monthly, because typically they pay quarterly, and just like we're going to look at this just like as if it were a savings account, which also would typically pay quarterly. So, but we really want to see, once people start thinking stocks, a lot of times, the people that aren't informed, they're, all, like, I'm not going to put any money into the stock market, I could lose it and blah, 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 blah. So, but the biggest benefit of having um, stocks that pay high dividends, and a high dividend is usually considered 5% and over, but we're going to look at the higher paying dividends that are stable. So where we really aren't concerned with the actual stock price on how the stock is actually doing, because it's relatively, it's not moving, um, you know, it's not moving at this incredible rate either way. It's not going up $50 and then dropping $50 and all this good stuff. So essentially, when you get a stock that has a dividend, it's just like a savings account where whatever you have invested into that stock, you are receiving a certain percentage of whatever you have invested. So, and now at this moment in time, it's May 4th, 2019. There are 39 stocks that pay monthly dividends instead of quarterly dividends. So this is an excellent way to um, to get some passive income and to not really have to worry about not really having to worry about stock prices and losing all this money. So, but like for instance, I have had stocks with these high dividends where they've dropped, a couple dollars here and there, and they typically, and they will, the ones that I have, they always go back up to the same price. Um, but I obviously never sell it, but I'm still getting, some really, really high um, dividend rates, and I'm getting paid monthly instead of quarterly. So I'm getting paid 12 times a year instead of 4 times a year, which is really, really cool. And there's only 39 of them to be exact. So, so I'm going to go into um, I'm just going to show you the three that I really like, and the one I've had for a long time, and the two I've had, maybe about half the time than the actual one. So I'll put this website in the description. You can actually download this into an Excel sheet. They show you, you can organize it by the name of the company, what the stock price is right now for the company, and how much the company actually pays out for a dividend. So I'm just gonna go. You just enter your email address, and they send you an Excel sheet where you can download it. So I'm gonna just show you what I got here. All right, let's get my face out of here. So this is the actual Excel sheet that they send to you via whatever email you put in, and that's all you have to do. That's it. So what I'm going to do is organize this by the highest, whichever one has the highest dividend yield. And like I mentioned, we can look at this, as if it were a savings account, and we have and we can look at this like an APY. So let's sort this by largest to smallest, and then it's going to show us which ones have, from the highest dividend yield, down to the lowest. So, but these are just ones that pay out monthly. So it's really nice if you have, extra money to spend, and um, you throw it towards a couple of stocks that are stable. And that's what we really want to look at. We want to look at these stocks that are stable, that will stand the test of time, and continue to get paid every month. And you can obviously decide whether or not you want to reinvest it, the money that you get, back into the company, or just keep that money instead monthly. So obviously, the more money that you have invested, the more you're going to get back. Very similar to a savings account. Whatever, how much money you put into the savings account, you're going to get paid more, however they pay you, whether it's monthly or quarterly. So out of thousands and millions of stocks, there's only 39 that pay monthly, and it's really interesting that the top three that we're going to be looking at right now, are actually the ones that I have, that I own. So now the one I have, AGNC, is one I've had for a long time, and I'll say that um, these top three right here that I have don't fluctuate that much. They're extremely stable stocks, and they have been for a couple of years now. So, so like um, I haven't seen AGNC ever go below $17 since I've owned it, and ORC and CPTA, also it's basically the same thing. They fluctuate a couple dollars, here and there, but it's nothing substantial, and it's nothing to worry about. And any loss that you would incur while you own the stock, you're making up in the dividends. So instead of, and like I said, these are monthly, so you're getting paid monthly. So we would look at it like, for instance, if we had $100 here. So if we had $100, um, obviously, I mean, I don't even need the stupid calculator, but if we were to get a 14.6% dividend yield, could you imagine having a savings account that gives you almost 15% APY? That gives you 15% interest on whatever you have in the savings account. That's all this is. So, and these three ones up here have the highest dividends out there that pay monthly. There are a couple other ones that are higher, but they are extremely fragile, and the stock price goes all over the place. And I am not a risk taker as far as my money goes. As far as investing goes, I am not a big risk taker at all. I don't want to lose my money. I want to make money. Um, so just looking at these, the top three, um, ORC, almost 15%. AGNC, this is the one that I've had for quite a while now, for a couple of years now, where their dividend yield is 12.1%, and they pay monthly. So how any dividend works, or even how like a savings account works, is they're giving you they give you 12.1% over an entire year. They're just they're just cutting it down into, so you're not getting 12.1% a month. You're getting what it would be for the entire year divided by 12. But still, it still works out really well if you have a couple extra bucks. And the really cool thing is that you don't have to put a ton of money into at least ORC, which is Orchid Island Capital, or Capitala Finance Corp. So the one's $6.63 a share, the other one's $8.64 a share. I've just had AGNC forever. $17.81 really isn't that bad. And when we look at the PE ratio, anything under, the long story short, anything under $20 is pretty damn good. Is actually fantastic, and anything under $10 is even better. So it basically goes by for every $4. Now this is just going by the stock price. For every $4.90 that you put in, you're going to make $1. Same thing. If you put $7.50 in, you're going to make $1. And every $8.90 you put in, you're going to make $1. But regardless, these are stocks that we really don't have to worry about what the actual share price is doing. We just want to have as much invested as possible in order to gain a regular interest, for us. So my recommendation, and what I do, is have two separate brokerage accounts. So they can be something simple too. Like you could have, say for instance, like these free ones. Like you could have Stockpile, and then you could have Robinhood. So what I do with the Stockpile is I'll split everything down the middle. So let's just say I had let's say I had $1,000 to invest. I would put $500 in Stockpile, and then put the option on to auto reinvest that money. So whenever I get the dividend yield, it just automatically reinvested in the company, Whereas Robinhood at the moment doesn't have that feature. So it just gives you however much you have invested, and then you receive your dividend on that, typically the same day of every month. That money is just in your account, and you can just decide to send that to your checking account, or you can reinvest it back into the same account, or you can reinvest it somewhere else. So I just don't like messing around with, say, quote unquote regular stocks. So, and the higher the dividend yield, it really is more of an incentive for people to purchase this stock. So, but it's just very interesting to me that the top three stocks here, ORC, AGNC, and CPTA, that these three highest dividend yield stocks are absolutely, pretty relatively low in price, especially ORC and CPTA, and are actually extremely stable. They don't fluctuate a lot. They don't do anything. So that's why these are the top three that I look at as just as if they were basically three different savings account with with an absolutely ridiculous interest rate. So, and with that once a month that payout comes, like I said, I think it's beneficial to have two different stock brokerages, two different stock brokerage companies. To reiterate, something as easy as Stockpile, something as easy as Robinhood. One automatically reinvests into the company, and obviously every time you reinvest in that company, you're adding money to it, and then the next month what you receive in your dividend is going to be higher than the previous month, and then having another company like using Robinhood, just actually keeping that and using that towards just adding that towards your regular income. I think it's a fantastic idea. So always do your research, of course. These are just three that I've checked out over a period of time. And like I said, I'll put the link of that website in the description. But really, the simplest way to put this is just to look at the three that I actually know a little bit about. Is just look at them like they're these really high interest savings accounts, and that's it. Don't worry about what the stock price is doing. Just know that once a month, they're going to give you a payout. So, and whatever you want to do with that payout is totally up to you. Obviously, the more you have invested, the more you're going to make. So, but yeah, that's just my 2 cents. Um, definitely check out the website, assureddividend.com. They have a lot of pretty neat information on what they're all about. Always do your own research for when you're investing, of course. But that's just my 2 cents. If you don't have a lot of money to spend, luckily the top dividend yield performer is only $6.63 a share. So you could even say like every paycheck, you could put $50 to $100 towards that, and you'll be really surprised, once a month getting some pretty, a decent amount of money. Like I said, obviously it all depends on how much you have invested. So, for instance, Ford actually in the past year invested $1 million into AGNC, pretty much just for the dividend yield because they're going to make it insane. Imagine putting $1 million into a savings account that had a 12.1% interest rate that you're going to receive. You're going to receive 12.1% of $1 million. So, but yeah, I mean, um, in my opinion, AGNC is the most stable, and then ORC and CPTA are right below it. But I like AGNC because out of all the analysts' reports, they have a 0% sell rate. Everybody typically buys or holds AGNC. And I believe with ORC and CPTA that the selling is not at zero, but it's really, really, really low. But AGNC is at basically an absolute 0% that people sell this. They just buy it, they hold it, and they just keep getting these insane dividend yields. Like I said, 5% is considered fantastic. So if you're looking at almost 3 times as much as that, it can definitely add up with the money that you're making and so forth. So I hope you enjoyed this video. Definitely check out ORC, check out AGNC, and check out CPTA and whatever you can afford. Look at the analyst reports and all that good stuff. The PE ratios for these are fantastic. Like I said, anything under 20 is considered good. Anything under 10 is fantastic. So the lower the number, the better. So like I said, it's whatever. That's for the actual stock price, but still, it's saying that for every almost whatever $4.90 that you're going to get $1. So the more that you're investing in it, but these are really stocks that you really don't want to sell. You just want to hold on to them to make some pretty decent passive income. So, and those are my 3 favorites, and luckily they're the 3 best dividend yield performers that pay monthly, and instead of having to wait 3 months. So you wait 1 month and that's it, and then you get a nice little chunk of change, and you can decide what to do with it. Again, to reiterate, sorry, I would have one account that automatically reinvests back into the company, and then I would have a separate account that you can just take that income and just deposit it right into your checking account. Or you don't even have to reinvest. You could just buy the stock whenever you want, and then every month just keep the dividend. Just keep the dividend. Just keep the dividend and just keep sending it to your checking account. It's free money. It's free money. There's no BS about it. And like I said, it's not like these are 3 stocks that I don't worry about. I don't have to check all the time. I'm not worried about what their stock price does. So, and if you do like accrue a loss of any kind, as far as if you see the stock price change and the stock price goes down a little bit, oh my God, the dividend yields will make up for that. Will make up for any loss in the stock price plus more. So yeah, that's all I have. Just definitely my suggestion is to check out ORC, AGNC, and CPTA. These are my three favorite. If you're a little tight on cash, then look at ORC and CPTA. But like I said, AGNC has a 0% sell rate, so that's the biggest reason I do like AGNC. But either way, regardless of the stock price, it's just whatever you have invested in the company. They're going to give you this percentage, whatever percentage, back. So it's supposed to be for a year, but like I said, obviously they divide it by 12 and pay you monthly. But obviously, the more you put in every month, it's going to go up. So I tried to make this as simple as possible. Thank you very much for letting me rant. And like I said in the last 3 or 4 videos, I'm going to do another at least $25 Amazon e-gift card giveaway. So, but yeah, that's all I have. Thank you very much for watching, and I'll see you guys.